Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, Jim, it's Friday again.
Bob, what's happening with the markets? You said they'd be strong going into March. We're at mid-March, so what's the prognosis and what's the diagnosis?
Yeah, well, that goes back to, last year when we were looking for a probability of a liquidity crisis being discovered in the fall, which was discovered. And then on that one, it could run as late as to Christmas, and December 24th, 26th seemed to be the worst, and we got technical readings on the S&P and on crude oil at the same time because they were both going down together. So then often there's a seasonal low in January, but we figured once you're partway through January, we could look for recovery in all these things out to around March, which we've had. But going back a few weeks in late February, there was a lot of them, S&P and copper and a number of things that were giving pretty good momentum readings, upside exhaustions. And we noted that as being, hey, it's up in the right neighborhood. And then we got a quick correction, and then we had a set of short-term trading buys. And then now the rally, hey, it's the Ides of March, a Roman would say. So anyways, as of today, we've got a sequential sell on crude oil. So let's just put it this way. We've got the up when we expected it, and attended by some strong technical readings. So here we go. Is it up when it should be? Yes. Are there signs of speculation? Yes. So we'll get a correction. And it's uncertain how far the correction would go, but when you look at things, and last year when we had our set of indicators, we called them friends of the bull market, which was industrial commodity prices, credit spreads, and the yield curve. And they were expected to be positive through till the middle of the year, which they were, and then perhaps start to change to adversity in August and September, which they did, and then, of course, we had the selling panics. But for this year, we had the same indicators, but we changed them, called them friends of the rally, because you cannot tell whether it's a new bull market coming out of the hit into Christmas. And the only way to determine that is if you get to new highs, and which is not happening. But here's the interesting part. We've got to some pretty good technical readings on the upside, but at lower levels on the S&P and on many other stock sectors. So I think we'll get a correction. Whether it goes to new lows or not, at this point I'm not certain, but we will certainly be monitoring it to watch and see how much it's oversold as this correction concludes. But out here, out in the other world, you've got in Turkey. Last year they had a currency crisis where all of a sudden their currency went down and their interest rates went up, and you had a financial crisis. And then this is often, if not every time, followed by a recession. So we saw last week an announcement that Turkey was now in a recession. And you've had a sharp slowdown in China's economy. You've got one that we watch is the short-term interest rates, the LIBOR, London Interbank Rate, and the 3-month. And it was rising in interest rates until December, and then it's come down, and it's come down far enough to take out some moving averages, so we can say that the 3-month LIBOR rate has reversed. And this is important, Jim, because in short-dated interest rates like LIBOR or in the U.S. Treasury bills, Canada as well, Treasury bills, they go up in a boom, and they go down in the contraction. But it's interesting because if we go back to 2007, in September, then the market was getting a little nervous. The actual high was in the middle of October. And some of the senior spokesmen in Wall Street said, oh, no problem, the Fed will cut interest rates. And this one was writing all over the place on it that if you take a few hundred years of business history and you're looking at numbers in the senior economy at their short-dated interest rates, and the lesson is very clear and very consistent. Short-rated instruments such as Treasury bill rates go up in the boom and down in the contraction. So here we are. As a matter of fact, the rally in January was accompanied by news that the street had concluded that the Fed would be making no more rate hikes. So that's the equivalent of saying, okay, the Fed can cut or something like that. But at any rate, there are so many theories out there, Jim, that in economics and in the financial markets that are not based on reality. It's amazing. So the LIBOR rate has turned down, suggesting that the boom in London and Europe is over. The 3-month Treasury bill rate in the U.S. has not turned down. So we watch for that, and we watch for some weakening in commodities, and this would say that the correction in the stock market is probably underway. So fascinating stuff.
We'll have more with Bob Hoye right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Bob Hoye. Bob, what do you expect is going to happen with crude, which I think was unexpectedly strong over the winter?
Yeah, it got, as I say, it got oversold right at Christmas on our technical work, and it's had a nice rally. And as of today, we've got positive excesses. As a matter of fact, we've got a sequential sell, and so the crude should correct, and this will. Oh yeah, it's a good thing you brought that up, Jim, because then that'll start to widen credit spreads because the credit spreads trade off of that. The yield curve itself, it flattened briefly with the rally out of Christmas, but it if you take the 5-year to the 30-year curve, yeah, it's quietly steepening, which is a sign of a potential contraction. Credit spreads have narrowed with the action coming out of Christmas, and they're looking like they're trying to reverse. As a matter of fact, we got the first breakout in that, but what was important last late September was when we got the second breakout on the widening of credit spreads. So the first one sort of head up, and then if we get the second one at some time, then that's will be closer to things heading down. But it's been a very good rally. Mother Nature and the stock market has blessed us with another opportunity to build some liquidity, take a little money off the table. And of course, this was our advice last summer, was to build liquidity, because in the fall there was a probability of discovering that there was a liquidity problem, which there was. So crude oil correcting in here, heading down, is not going to be kind to the markets.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, what's the prospect for gold and silver?
Yep, they have had their rallies. A couple of weeks ago became kind of overbought, and we've been looking for a correction. But one of the things you should realize is that in a bubble, the senior currency kind of goes down, and then in the post-bubble contraction, the senior currency, which is still the U.S. dollar, becomes chronically firm against most other currencies and most commodities for most of the time. And this then is, of course, going to have a dampener on gold, but it gets very intriguing, because if we go into another liquidity problem, the serious money goes to the most liquid items, which are short-dated stuff, U.S. Treasury bills, very liquid. Well, it's one of the most liquid places. And then the other place that is liquid, of course, is gold. So there'll be a bid for gold, but then there'll also be a bid for the U.S. dollar as other people position in Treasury bills. So I don't see a huge gain in the dollar price of gold. But, you know, if you look back over the last year, the price of gold in Canadian dollars has been pretty good. And also other currencies that have been weak relative to the dollar. But as you know, we're very bullish on the long term for the gold sector, because in previous post-bubble contractions, the real price of gold has gone up, which improves operating margins for gold mining, and also improves the valuations for gold deposits, exploration bets, and things like that. So, and it's been very reliable. Every post-bubble, like the few years after a post-bubble or a bubble top, then into the post-bubble contraction, the real price of gold has gone up, and then you've had some very strong rallies for the gold stocks, which are ahead of us. And of course, the entrance is always difficult. We advised on some of our indicators fell into place on November 1st, and that's when we advised to accumulate some gold stock on weakness. And then now we've kind of got, we've had some excesses on the upside, so it was a time to trade off some and take a little money off the table. But essentially, Jim, we're in the early stages of what will likely become a terrific cyclical bull market for the gold stocks and also for the silver stocks. So they'll go along with the gold stocks. So I'm looking forward to it myself, and I think there will be a lot of money to be made in the gold and silver stocks.
What about junior gold miners?
I always liked that sector. Having been in exploration work decades and decades ago, a discovery really adds value to a company, of course, but it is, and then you can get your fastest moves. Now, as you come out of a bear market, of which the gold sector has been in, you can get some terrific rallies, which we've had a very good one out of Christmas. Well, actually earlier than that, out of November. So and all of them have rallied. There's been some juniors that have had some exploration excitement that have moved well, but we're in a kind of market where smaller companies have to have some pretty good promoters and a pretty good story to make them go. But eventually, we will be into where everything's going up for a few years, and because you look back at the bull market that ran until it was extremely overbought in 2011. That was essentially a 10-year bull market. Absolutely incredible. So there was hugely speculative action at the top. And so this is a long bull market is ahead of us. And I'm sure that as it matures, there'll be all kinds of speculative plays in the juniors. And beyond speculative action in the stocks, Jim, that raises money for good prospects. And then you have the money going into the ground by the way of drilling, and you're drilling off and creating ore reserves. And then you're creating an economic reality. And I really do enjoy the exploration side. I'm looking forward to one hell of a good market in that sector.
Bob, thank you so much for chatting with us.
Here we are, and we'll look forward to talking next week.
Enjoy that St. Patrick's Day patio. We're going to have good weather.
Oh, right. That's right. Thanks. You got me focused on the weekend now.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for Bob or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.